It has been a major news week for Crypto.com and CRO. The Cronos bridge looks to launch in the future, which could bring millions of dollars from Ethereum over to the Cronos chain at a time when Cronos really could use the boost in total value locked, as it is once again outside of the top 10 blockchains by ranking. The Crypto.org community pool wallet now has 4.3 million CRO waiting to be burned and removed from the flow completely, and Crypto.com's biggest competitor Binance is facing trouble in Australia, while Crypto.com does continue to gain that regulatory approval, just this past week receiving a major payment institution license in Singapore, which could mean very big things for the global adoption of CRO. We're going to break down all this for you guys in this video, as well as give you an update on the CRO price action in today's daily market update. What is up, everybody, and welcome back to the Everything Crypto Show. Now, hopping right in here with the weekly CRO update, I do want to start off with the centralized exchange news. So, taking a look at Binance here, that does have 63.9 billion in customer assets compared to Crypto.com's 3.38 billion. I mean, Binance clearly has a massive lead over the majority of the industry right now, but it looks like Crypto.com is seeking to gain some ground versus Binance, as they are gaining a ton of regulatory approval, where Binance is actually facing issues in a lot of regions they were previously operating in. So for starters, we saw that Binance Australia suspended AUD fiat services, citing issues with a third party. So here's the tweet. They say, "Fellow Binanceans, we regret to inform you that with immediate effect, we are unable to facilitate AUD deposits for Binance users due to a decision made by our third-party payment service provider. We understand from our third-party payment service provider that bank transfer withdrawals will also be impacted, and we will advise users on timeline when this is confirmed," meaning you can no longer either deposit nor withdraw money in AUD via a bank transfer. They say here, notably, you can still buy and sell crypto using a credit or debit card from the account, and rest assured your funds are safe. And then they said here, on May 22nd, we've confirmed with our local payment partner that our users can continue to withdraw until 17 o'clock on June 1st. Users can still continue to buy and sell crypto via debit and credit card, and they're working on finding an alternative provider, and they have yet to find one. So if you have any money on Binance Australia, your funds are locked on the platform. You cannot withdraw them via bank transfer. What you can do is buy crypto with any existing funds and maybe move it to a wallet that does allow for bank transfers, maybe a platform like Crypto.com, as they are still operating as normal in this region. And we can actually see the email here that was sent out to Australian users. This is the email that they got. We regret to inform you that with immediate effect, we are unable to facilitate Pay ID deposits. The suspension comes a month after the Australian securities regulator canceled the financial services license of Binance Australia derivatives after it reviewed Binance's local operations. And this comes at a time here where we see Binance being effectively shut out of regions it is operating in, at the same time that Crypto.com has continued to gain key regulatory approval in regions all across the world. So we saw here on Twitter, Crypto.com is excited to share their latest regulatory achievement in one of the world's leading crypto hubs, Singapore. Now, Singapore is well known for actually being incredibly stringent when it comes to offering securities laws, regulations, and allowing crypto platforms to operate in this region. And Crypto.com, being a security leader in regulation and compliance, has officially received this major payment institution license. This means they are able to offer digital payment token services, and with this license, they can continue to extend what they are able to offer to residents of Singapore. Now, the CEO, Chris Marzalek, says here, "The Monetary Authority of Singapore is recognized globally as a regulator that ensures responsible innovation of the digital asset sector. We are proud to receive the license from a regulator that prioritizes consumer protection, safety, and security. We look forward to continuing to collaborate with MAS and leading at the forefront of crypto in our home market." So Crypto.com, based in Singapore, is now able to operate in this region. And this has been a pretty common theme for Crypto.com. It seems that throughout the bear market, they've really focused on just building out a base of security and regulation. I think that the benefits of this are not really going to be fully recognized until the next bull run, when the next wave of crypto users are onboarded onto different platforms. And we can take a look here at the bottom of this article as Crypto.com flexes on just how much growth they have seen and how much regulatory approval they have received throughout the past year to year and a half. So it says here that they have in fact received regulation in France, in the UK, in Dubai, in Australia, in Italy, in Greece, in Cyprus, in South Korea, and they actually are the first global crypto exchange to sign a pre-registration undertaking with the Ontario Securities Commission and Canada Securities Administrators. Binance did also recently announce their exit from Canada, and it's also, if we Google here Binance Singapore, we can also see here that while Crypto.com is operating in Singapore, Binance has not been operating in Singapore since late 2021. So September 27th of 2021, it says right here on the Binance website that users in Singapore will not be able to access certain functions on Binance.com, including fiat deposit services, spot trading, and the purchase of crypto through fiat or liquid swapping. So pretty much anything you would be using a centralized exchange for, you cannot use Binance for in Singapore. And this means that I really think Crypto.com, while Binance does have a lead, that they are really working on becoming a global brand that is regulated everywhere, able to operate in as many regions as possible. And I do believe that this could have a trickle effect into CRO, as Crypto.com does have different programs and rewards that do incentivize you to not only buy CRO, but also to hold it to continue benefiting from their ecosystem. The main example of that here is the Crypto.com visas, which does incentivize you to not only purchase CRO, but also to keep it on the exchange or actually locked up on the app to continue receiving the benefits the Visa does have to offer. I think it's a very powerful tool for customer acquisition. And another one here is the Crypto.com exchange, which does offer you basically preferred trading rates depending on how much CRO you have locked up on the platform. And we know that the Crypto.com exchange has actually been working with select institutional investors since I think it was March of 2022 based on their post here. Now, we can see that right here, March 15th of 2022, they began their rollout in the US for select institutional investors. And once again, we see that Binance is actually running into trouble right now with the Commodity Futures Trading Commission in the US. So we can just see here a very common theme of lots of countries actually giving Binance trouble, trying to shut them down and going after them, while Crypto.com has been very compliant here with regulators and has been pretty much smooth sailing here in terms of operating. Now, the one thing I find interesting about this lawsuit with the CFTC concerning Binance is that this was actually based here on the Binance futures trading, their options trading, which the CFTC is saying is actually basically not regulated in the region, while we have Crypto.com actually launching up-down options for US users. And it says right here on the website, this is the first CFTC regulated crypto derivatives product. So Crypto.com, they made an acquisition, I believe it was like in late 2020, maybe 2021. Must have been 2021, maybe even last year at some point, but they basically acquired a company that did actually allow for derivatives trading. They were regulated by the CFTC, and by acquiring this company, basically Crypto.com, through acquiring them, is now also CFTC regulated and legally able to offer options trading in the US. So very good for Crypto.com, and I do believe that if they can continue to grow globally, as well as incentivize people to buy CRO coin for their different products, that this could fare very well for the global adoption of CRO coin in the long run. Now, I want to talk into the DeFi side of things here. Speaking of the Cronos bridge for starters, and I want to talk about this because we've been waiting on the Cronos bridge for quite a while. I do believe this could help bring millions of dollars onto this blockchain, as the Cronos bridge is effectively positioned to be a decentralized bridge between Cronos and the Ethereum mainnet. The bridge aims to connect Cronos with Ethereum, funneling additional liquidity into the Cronos ecosystem. So we can see here right now, you can actually go ahead and swap something like CRO between the Crypto.org chain and the Cronos chain. However, if we take a look here at assets available, let's go to blockchains. We can see that Ethereum is still coming soon. Now, I do want to see Ethereum, this bridge hopefully get launched at some point in the future, because this could help a lot of these Ethereum tokens actually make their way onto the Cronos chain. And the way this effectively works is, let's take an example like Quant. You guys know I love Quant here on the channel. So let's take an example like Quant. Quant is an ERC20 token working on the Ethereum blockchain. Now, if you wanted to go ahead and move your Quant over to the Cronos chain, you could put it in the bridge from Ethereum to Cronos. The ERC20 version of Quant would be locked on the Ethereum chain, and an equivalent amount of Quant would be printed as a CRC20 token on the Cronos chain. Now, you could go ahead and then use your Quant in different DeFi protocols that the Cronos chain does have to offer. Let's say, for example, something like VVS Finance was offering a yield on Quant. That's just an example. I don't think it would happen. But if that was the case, you could basically just go ahead and you could stake your Quant on VVS Finance via the Cronos chain. Now, let's say you've gone ahead and staked your Quant and you want to move it back onto the Ethereum blockchain. You go back to the Cronos bridge, the CRC20 version of Quant will be burned, and then the ERC20 Quant will be unlocked and put back in your Ethereum wallet. So it can be very advantageous for people who do potentially want to bridge tokens over from Ethereum to Cronos for a variety of reasons. The main one that I would personally see for DeFi would in fact be, additional yield or something like that, maybe a liquidity pool not available on Ethereum. Definitely always risk associated with bridging and with DeFi in general, so I always recommend doing your own research and really just kind of assessing your risk tolerance. But this could potentially help see millions of dollars flow into Cronos. And yeah, I mean, not for nothing, but this comes at a time when Cronos really looks like it could use the boost, currently sitting in 11th place in terms of TVL across all blockchains, with 354 million in total value locked. Now, if we actually take a look here at the Cronos chain and line it up with the price action of CRO itself, you can see the TVL has really taken a hit in line with the amount of the actual decline in the price of CRO. If we take a look at the Cronos TVL denominated in CRO, definitely not as bad. I mean, in USD valuation, we can see Cronos has gone from 3.56 billion USD down to 353 million. So a 90% decline in TVL when denominated in US dollars. However, denominated in CRO, we can see it went from 10.23 billion down to 5.92 billion. So more like a 40% decline here in the TVL if we are kind of, basing it on the native token of the blockchain, which is CRO. So we can see here, taking a look at the Cronos chain, it has pretty much flatlined since the beginning of January, sitting at 386 mil in TVL, now down to 353 million in TVL. And this is interesting because if we take a look here at CRO itself, and let me get the price range going on here real quick. We can see here, if we take a look at CRO, CRO's actually up about 7% year to date. So, definitely underperforming the blue chips like Bitcoin and Ethereum. But that goes to show you that it is not only a matter of the CRO price action itself, as Cronos is up year to date, but Cronos is still bleeding in TVL. And then taking a look here at the Cronos chain value denominated in CRO, we can see this has declined here from 6.91 billion down to 5.92 billion. So about a 15 to 18% decline more or less in the amount of CRO that is on this blockchain. Now, I do hope that this bridge is able to bring some total value locked back into Cronos, as you can bridge Ethereum tokens over from ETH to Cronos. And I mean, just take a look at how much TVL is on Ethereum. Right now, we are currently looking at ETH making up 2/3 of all total value locked in DeFi, with how much is it right here? 48.56 bill in TVL. So even if Cronos could capture like 1% of the TVL on Ethereum, which I don't think will happen, but just as an example, I mean, this would easily bump Cronos back into the top 10 blockchains, which would definitely be nice for CRO itself. I mean, the more adoption we see of the different products, the Crypto.com app, the Crypto.org chain, the Cronos chain, this would hypothetically mean more use cases and therefore more demand for CRO. Now, here's the silver lining, and something I do want to discuss is that it's not only the Cronos chain, okay? Here I actually have Cronos versus Polygon versus the Binance Smart Chain and versus Avalanche, all of which we can see have effectively kind of flatlined or just either slightly increased or decreased since the beginning of the year. So this goes to show you right off the bat, it's really not only a Cronos specific problem, and really just a lot of these different top 10, top 15 chains that are facing this issue. Now, Ethereum has been slightly different in the fact that Ether has actually seen a ton of money flow back into its blockchain since the new year began. However, this is very characteristic of these sort of accumulation phases in which we do tend to see the big blue chips gain value versus the smaller altcoins, as people do tend to flock to safety. And at this point, I mean, we know Bitcoin is a blue chip. That's why Bitcoin has outperformed majority of alts this year. And I think Ethereum has positioned itself as the blue chip, the king of DeFi. Hence why I think that Ethereum DeFi has seen a nice boost while a lot of other ones have remained stagnant. Now, additionally, another very important thing to consider when it comes to CRO is that it is not only reliant on the Cronos chain. We have the growth of Crypto.com as discussed at the beginning of the video, and we also have the Crypto.org chain. And speaking of this chain, we now have 4.35 million CRO in the Crypto.org community pool wallet that is waiting to be burned and effectively removed from the float completely. And this burn proposal was pretty controversial. Even myself, I was not really on the side of allowing this proposal to pass. However, it did pass, and now there's about $250,000 worth of CRO that would be handed out to validators instead sitting in this community wallet waiting to be burned. Now, here's the thing. The reason I wasn't a big fan of the actual burn proposal in the first place is because you're basically giving up 15% of annual emissions to put it in the burn wallet. And they're estimating that the first year is going to burn 100 million CRO, which would effectively mean you're giving up 15% of your rewards to burn 0.3% of the total supply. Now, what has happened here is the 15% reduction in rewards did have an immediate impact on staking. However, when the burn proposal actually went live, the Crypto.org chain was sitting at about 6.3 billion CRO delegated. That is now down to 5.59 billion CRO delegated, meaning about 15 to 18% of all people staking CRO actually removed it from the Crypto.org chain. And because there's less people staking for rewards, more rewards are being given out to people who are still currently staking. This means that if you are still staking via the Crypto.org chain, you have benefited from both the burn proposal passing, although slightly I think you are still, seeing CROcoin being burned, and you are also benefiting from an increased APY as some people have been leaving this chain. Now, it's worth noting that the Crypto.org chain dropped from about 6.3 billion to like 5.3 billion CRO delegated, and that's already back up here to 5.6 billion, effectively meaning that I believe some people who left the ecosystem following the burn proposal have simply just re-entered, realizing that the staking yield is still very enticing at that double-digit reward count. And we can take a look at stakingrewards.com. And you guys will see here, like even based on this post or based on this chart, that relatively speaking, like a 10% yield is still very impressive that CROcoin is currently offering. So I do still have reasons to be bullish on CRO, including the Visa program, including the Crypto.org chain. The Cronos chain has flatlined like a majority of these different blockchains, and we'll have to see how it behaves more so when we do enter the next bull run. Now, I do want to give you guys an update on the price action of CROcoin here, because while it has, if we take a look here on a 5-year, it does look like it's been relatively flat. However, if we actually zoom in on a year-to-date basis, CROcoin has been a very fun coin to trade in this range. So I've been talking about this key level right here at about 5.5 cents for pretty much since the first time we hit it back in November. The first time we hit 5.5 cents, CROcoin rallied a nice 38%. And the second time it hit 5.5 cents in the new year here, it actually rallied about 72% at one point before giving up majority of its gains on the new year. And the reason 5.5 cents, I was looking at this as a key area of support. If we actually go back to a 5-year chart here, you're going to see that 5.5 cents was key support back in February of 2021. This is when the CROcoin first burn was announced, that 70 billion burn, and this led to CROcoin going on a major rally. We can see here CRO actually rallied, what was this, over 1,500% from give or take 5.5 cents all the way up to 95 cents before peaking. Now, we don't have the same catalyst in line to support such a big move. This was based on the 70 billion burn on the Staples Arena name. We just simply don't have the same catalyst in place. However, 5.5 cents has proven to be where a lot of buyers do feel comfortable stepping in on this project. So I am eyeing 5.5 cents as a potential buying opportunity for CRO coin if it does come again. And zooming out, you can see the bull market support band has been a very strong area of resistance, as well as the 50-week moving average. So if CRO coin does want to make its way back down to 5.5 cents, I will be keeping an eye on this price level. And as always, I will keep you guys updated on CRO coin and the price action. So on that note, I hope you did enjoy the content in today's video. You know what to do. If you made it all the way to the end, you are an absolute champion. Let me know in the YouTube comments down below and claim that champion status. I hope you are all having an amazing Sunday, and I hope to catch you in the next one. Peace out for now.